Hello, hello, good afternoon. Welcome once again. It's Natasha Wackers with the monthly market report. We're back again. Today, we're going to go over a little bit about the inventory and supplies and demand, a little bit of that. So, let's get the first slide going. All right, supply improves but remains a little bit limited. As we know, over the past year or two, we've seen a low limit of supplies across the country. So we're going to dive in a little bit deeper into that and see how there is a slight increase of supply, but is it enough to match the demand? So let's get the next slide. All right. There were 7.1 more homes for sale in June compared to the same time of 2022. This means that there were 41,000 more homes available to buy on a typical day this past month compared to 1 year ago. And this is as per Realtor.com. So we did see a slight improvement in the amount of inventory in terms of home sales. So what a lot of people are banking on is that we're going to see this large push of home sales, which is going to mean a decrease in price. But the way that the market is, I think there's still going to be outnumber. The demand is going to still outnumber the amount of supply that's available for purchasers. Let's get the next slide. Okay, active listing improve. So this is going to be over the last couple of months from 2021, 2022, and into 2023. As we look back into 2021, we saw a huge supply and we saw a dip off coming into 2022. We're starting to see an increase. So the blue is going to see this decline in home supply. We're starting to see an increase in home supply in this last March and May, but nowhere near the inventory that we need to see a reduction in home prices. So that's what a lot of people are counting on, is that we're going to see this mass introductions of new homes. All of these foreclosures are going to come into play, and we're going to see a drop in price. Let's get the next slide. All right. So the numbers of home for sales in June 2023 month active listing versus last year and pre-pandemic 2017 to 2019. So this is going to span back from 2017 to 2019, and we're going to, in terms of the red, and we're going to look at the blues where we've seen an increase in home 15%, 7% and 11% in all regions except for one region, which is the Northeast, which we're still down in inventory in terms of homes for purchase. And we still have that huge demand. Let's get the next slide. In the final weeks of June, we noted that inventory actually declined year over year based on the first time since last April. This substantial slowdown was primarily driven by fewer potential sellers opting to list their homes. So we know that a lot of people are listening to the news broadcast and seeing this increase in interest rates. And then there's a lot of clients who are selling their homes to purchase, to either upgrade into a bigger space, expanding their family, or for the retirees who are retiring and downsizing into a smaller space. So they are conflicted. They're seeing the higher prices in homes, and then they're seeing the increase in interest rates. And they're weighing the options whether or not they should move, they should upgrade into these bigger homes, or even downsize into those biggest homes. So we see the nervousness in the market. But I think what they fail to understand is that them holding on to these homes are driving the prices up because it's increases the demand, and they're paying attention to all of the headlines and not looking at it logically. Let's get the next slide. Now, this active listings greater than new listings for 13 months. So as we look at the green is going to be the active listings, and the blue is going to be the active listings, and the green is going to be the new listings. As we look across the months, we're seeing that there's a lot more active listings and fewer new listings that's going to market. And as we know, it's real estate is still seasonal. We go in and we see a lot more homes come onto the market for that spring market, where most people are trying to sell their homes, put their homes on the market in the early spring, trying to sell late spring, early summer, or midsummer, and then we start to see that pullback going into the fall. Let's get the next slide. In June, the number of homes newly listed for sale declined by 25.7%. Compared to the same time, new listings remain 27.6 below pandemic levels of 2017, 2019. So although we're seeing this increase in homes on the market, we're still below those pandemic levels that we saw in 2017 and 2019. In fact, the pace of new homes listed year to date is even 16.4 lower than the first half of 2022. So when we look at the first half of 2020, when we look at the first half of 2020, we still have 16.4% less homes on the market, and that's pre-pandemic. So let's get the next slide. Okay, now this is gonna show how seasonal. When we dig in deep, you can even see how seasonal the market is. This is going back from January, where we see that incline, and as we look, this is 2017 to 2023. So the dark blue line is going to be that 2023 period. As we can see, the new homes were still so high. With so many new homes in 2017, 2018, 2020, we saw that dip off, and then we saw an increase in homes again. 2021, 2022, we saw these fall off, but they're still higher than where we were at 2023. But this is where we were talking about that seasonal period. As we see that more homes come on the market in January, and it goes up, and then we hit that June, which is the beginning of spring, February, June, beginning of spring, and we start to see that fall off going into September and October. We have that period where people are going back to school, so they're taking the house off the market, to take care of their families, to make sure that everything is situated. And then we'll see another increase going into that next spring and summer. Let's get the next slide. Okay. I didn't fully anticipate how much the move in interest rate convinced people not to put their homes on the market. This is according to Tom Beckett, or the president of Federal Reserve Bank of Richmond. So this is just saying that they didn't foresee that this huge swing in interest rates was going to scare this many people. So we understand what's going on in the market now. We understand all the FUD that's going on in the market, and they didn't predict that this was going to have this effect on the housing market. Let's get the next slide. Okay, new listings down 99% of the country. So this just shows it more that 99% of the country is showing less new listings than before, and we've just been speaking towards that all video. There's less homes on the market, so it's maintaining that high demand for homes because there's people still looking for homes, and there's more people that's looking for homes than on the market. We are seeing that slight increase, and we are seeing homes stay on the market a little bit longer than they did in 2022, late 2021. But I still don't think that there's enough homes to substantiate a huge decrease in price. I think the market has balanced out quite a bit, and we're in a balanced market where we're not chasing homes, but there's still not enough homes available for us to be in a true buyer's market. Let's get the last slide. History has shown that higher interest rates may take the steam out of rising prices, but it doesn't cause them to collapse entirely. This is especially true in today's housing market, where the demand for homes continues to outpace the supply, keeping the pressure on house prices. And this is according to the chief economics in First America. So he's just saying what we've been saying all video. There's more homes, but the demand for homes is still outpacing the supplies. So this is Atasha Watkins, Fit Realty Services. Thanks for joining us again for another Monday Market Report. We'll see you next week. Peace.